Good evening. All members are requested to put their registration membership number in the chat box.
Good evening, all the participants. We will wait for another 5 more minutes so that other people can also join, and then we can start the session. Thank you. Yeah. Good evening, everyone. On behalf of ICMA Nasik chapter, welcome to our Golden Jubilee Year webinar on financial budgeting process. This is a 2 hour CPE program, and please stay muted. Most post questions in the chat box so that we can discuss at the end, and you can also fill the feedback on the chat box at the end. Yeah. So it's my privilege to introduce our speaker, CMA Sunetra Ganesan ma'am, a seasoned finance leader in uh, process control, controlling compliances, profitability analysis, system integration, and so on. She has led finance transformation and SAP FICO implementation at GSK, Kraft Heinz, and Forbes companies, and so on. She has led finance transformations, as I elaborated. Severed recently, she was worked as a CFO in Mahindra EPC Irrigation Limited. Her work spans unified accounting frameworks, inventory valuation, budgeting, expense control, business partnering, and so on. She has received CIMA UK 100 most influential CFOs in 2016. She has also got award as a CFO 100 in 2019, 22 and 23 as well. She got award. She also got award as a CMA Achiever Award current year. She is a fellow member of ICMAI. Today, she will share her practical knowledge, end-to-end budgeting playbook, assumptions, costing, capex, and so on. So, finance and business teams can act with speed and confidence. So, please join me in welcoming CMA Sunetra Ganesan, ma'am. Ma'am, over to you. Hello. एक मिनट. I think she's
Madam, you're
mute.
mute.
Yeah, एक मिनट.
So just to add to what I said, I thank Dhananjay for
Yeah,
the
yeah.
great introduction. I was wondering whether he's talking about me or somebody else. I'm not so great. I'm very simple. Just to give a brief introduction besides my career introduction that he gave is I'm basically from Mumbai, born and brought up in Mumbai. I've studied in Mumbai and I came to Nasik some around 9 years ago. And I like Nasik and I have not left Nasik since. So that was briefly about me. I did my CMA along with my BCom, and I did my BCom from Narsi Monji College, Mumbai. And for CMA also, I did oral coaching from NM College as well as for final from Sydenham College. Having said that, okay, I started my career in Mumbai because I was from Mumbai. And from a costing career, I did not even notice when I moved on to a financial career, financial accounting career. So my last assignments were of CFO. About 10 years, I have been CFOs across two listed companies. So before we start the session, I would like to tell all of you, don't set boundaries for yourself, because it pains me if I look at some of our chats in WhatsApp and people keep saying this is not available, institute didn't do this for us, we cannot do this. It is finally our own limitations. If we wish to, we can do anything. And if we keep that negativity aside, then we can actually progress better. This is my personal advice to all of you. Leave all that aside, focus on your career, see what you can do best. Okay, why did I choose this topic? Because probably for CMAs, we do not get into this. We talk about product costing, we do cost audit, we do GST, but this is a part which actually gives you more focus in an organization. So to keep that focus, we need to improve something in ourselves so that our role improves. And as I had written in my communication this morning, it does not matter whether you are in the organization or you are working as a practitioner from outside. Usually we get, for those who are in practice, we may get assignments that are more related to cost audit or GST. But it is for us to turn that into an opportunity. To me, and I have actually said this to many of the practicing CMAs with whom I interact, that cost audit or GST, which is statutorily required, is a foot in the door. You get an opportunity to meet the management. You get an opportunity, especially in cost audit, to get into the actual working of that organization, use that to give more to the organization than just cost audit. If they see your potential, if they appreciate that, it will open doors for you. Simple logic, which I applied to myself. I'm telling you, whether you accept it or no, you take it from me today. Okay, doors open only if we make use of it. If we refuse to say no, if we refuse to build boundaries, and then only those boundaries will break. Having said that, we will move to our topic today. Now, I cannot just keep on talking. I can talk, actually. Those who know me know that I can just talk. No problem. But I want to have this as an interactive session, because budgeting is a very heavy subject. So if you do not understand any concept, you can mark it and we can discuss it further. If something is absolutely not understandable, or what I'm saying is not going through, then you can even stop me, no issues. So let us start. As I said, we are looking at budgeting as a means of our own growth, as well as a means of growth to the companies that we work for. Right? So can any one of you, before I put up my slides, can any one of you tell me, why do we have budgets? Why do we need budgets? Please, my request is, please share your thoughts. It is very boring for me to keep talking alone. Why do you think we need budgets? Come on, folks. I'm telling you seriously, I don't enjoy talking alone, Raya. Come on. Why do we think we need budgets? This is difficult if you will not talk.
So, ma'am, I was working with Sula, and I have seen if the budget is not available, then probably nobody will have a control on the expenses in the as a targets. That's why, according to me, budget is an important aspect, because if we are doing a business, we need targets and then we can achieve it.
Perfect.
That's why budget is
Perfect.
important. Yeah.
So budgets help us build a goal or a target which we set for ourselves for a coming year. And really, team, I would request you, when you are asked to talk, you may please talk. There is no need for you to ask permission or anything. Just unmute your mic and talk. Can anybody tell me what is the difference between estimate and budget?
Pardon, ma'am, estimated?
Estimate and budget. What is the difference between estimate and budget?
Okay, ma'am, we need budget for, we cannot have negative cash flow. For that, we need proper planning.
Perfect.
So estimate is just like a statement where you are just predicting your expenses or revenues, but you are not actually calculating the monthly cash flows or in detail like we do in budget.
Right. Anybody else? Anybody else? Come on, don't tell me you have joined. Yes.
Estimate is for that. Estimate is roughly we are made the expenses, but the budget we need to stick the expenses.
Perfect. Yes. So in the budget, we are setting goals. We are setting targets. Estimate is an estimate. It may come right, it may come wrong. It is an estimate. Budget is a goal. We have to work towards achieving that budget, and therefore budget. So budget, when we say budget, we also in the same breath say budgetary control. But today we will talk only about budgets. Budgetary control maybe some other day. But to do the budgetary control, the base is you need budgets. And to do budgets, we do not need any great system. You can do a budget on Excel. You can do the budget on paper. Budget is what you bound yourself with. So when we talk about financial budget, right, we will, this is what we just now discussed. It is an operating plan. Means it covers the full company. It is not only sales budget. It is not only production budget. It is not only cost budget or capex budget. All this together, it is a pan organization effort to set targets or goals for the coming year. And within this, while we do this, we review the costs of the previous year. We try how best we can control them or optimize them. We take some strategic decisions like, okay, so and so market was not yielding, was not giving much yield in the last year. Is there a way to improve, or should we drop focusing on that market? So it is a cost and revenue comparison and decisions being taken. Now we may say that if it covers everyone and it covers all the functions, then who owns the budget? Who owns the budget? Any idea? Who owns the budget?
Okay. Finance manager or CFO?
He may work on the budget. He doesn't own the budget. The ownership of the budget is also pan organization. And those organizations which have matured, they actually set up individual goals based on this budget. So you perform or you don't perform based on whether you have met the budget or not met the budget. So within the whole operating plan, there will be smaller plans. And mind you, there is nothing wrong in giving a wrong answer, but it is important to participate so that I understand whether you are with me on the topic. And as I said, some of these things may be slightly heavy. And as I said, again, if you see this list which is in front of you, it covers everything. It simply covers everything in an organization, and therefore, we CMAs are best suited to handle it. Keep that in your mind. Our training is analytical. We are trained to be analytical. And therefore, anything that requires analytical strength is our area. Be bold in your organizations if you're working in an organization to go up and say, I will lead the budget this year. Whatever support you may require or guidance you may require, I will personally give you, but go ahead. Be bold. Those who are in touch with organizations as the organization being your client, you can always propose, do you have a budget system? Can I help? Can I help you do it? And mind you, it is a very tedious process. And most organizations will be happy if somebody is coming forward to do it. It is a tedious process. It takes a lot of effort, but it gives us immense understanding about that particular organization and that particular industry. And I'm again telling you, more than any other accountant, CMAs can do this best. Because this has no rules. There are no rules. Unlike financial accounting, this is the way it should look. This is the format it should have. There are no rules. It is only understanding history, understanding future requirements, and setting up the plan. So I have tried to put these functions in a sequence. That sequence should, I've tried to put the sequence that matches with how the activities happen. And all budgets start with the sales budget, because unless you can sell everything that is produced, then only it will start with production budget. Supposing your production is a constraint, then your budget will start with production capacity and not with sales. But if that is not the case, then most of the budgets will start with sales. Supposing I have a batata vada stall, I have a capacity to make batata vadas in one session or in one day. Therefore, that becomes my constraint. Maybe there are lots and lots of customers. Everyone passing by may pick up. So customer is not the constraint. My ability to manufacture is a constraint. In that case, my budget will depend on how much I can manufacture. But otherwise, in most of the industries, it is sales that takes priority. Of course, when we match it, we do match it with our capacity and then think how we can enhance that capacity to meet the sales requirements. So far, we are okay. So, sales plan. Usually, to get the budget correct or to do it very systematically, we need the sales plan. And the sales plan has to be by product. Very often, some companies make sales plan as sales value. You cannot build up cost with just value. Because at the end of the budget, you will make a P&L, a balance sheet and a cash flow, very similar to your financial P&L, balance sheet and cash flow. The only thing is this one is budgeted for the next year. So to get it right, you will need the sales plan by product or at least product group if your products are many. Then it will be by region, by branch, or region or branch, whatever is the way of grouping the geography. And of course, it should be by month. At least very, very few companies monitor by week. Mostly they monitor by month. Some monitor by quarter, but the purpose of budgeting and budgetary control is defeated if you make budgets by quarter, because you have lost valuable time if you review at quarter end. While if you review at month end, or even sometimes it is possible to review during the month, then your review becomes more realistic and you are able to make corrections. So, why do we think we need it by region? Why would a sales plan be required by region? Finally, we are going to make the P&L at company level. Anybody? Any guess? Anybody can tell why do we need it by region or by state? Mostly in most of the company states, we define branches as state. Maharashtra branch, Gujarat branch, so and so, or we say West branch, East branch, North branch, South branch, Northeast branch, whatever. Why do we need this? Anybody?
In order
Probably
to know the profitability of the respective branch, ma'am.
Correct. Very good. Because when we are budgeting, we are looking at the granular level of profitability. There is no point, unlike financial accounting, which looks at profit at the end of the year. Profit at the end of the year is of no help except to report. So when we make budgets, we look at all streams. Is a product stream profitable or not profitable? Is a branch profitable or not profitable? So accordingly, we will plan the budget. Supposing I have 10 branches, out of that, one branch is not profitable after we finish the full exercise. We realize, and remember, budget is not done in one shot. It is to be done and redone till we get our required goals. So if we see a branch in the initial first cut P&L, the branch X branch is not performing, it is not giving a profit, or it is not giving a cash flow, then we relook at that branch. Either we find ways to expand business in that particular state, which is mostly what we do. And if it is not possible, if that region is struggling, we do not focus on that region. Because when we make budgets, we cannot make a loss-making budget. Loss may happen, unfortunately, during the year due to some adverse event. But when we budget, we never budget a loss-making budget for any region, or we do never make a negative cash flow budget. Budget is not only P&L, it is cash flow. Because for a business, cash is cash. You may book any amount of profit. If you do not have cash, if your cash flow is negative, sorry, then you cannot accept that budget. Because nobody will want to do sales and not earn cash. I hope this point is clear. Then depending on the industry, depending on the company, we have various ways of pricing, some schemes, some discount schemes. Some companies, if they are FMCGs, they may have discount schemes closer to Diwali or Dasra. Some may have closer to New Year. Some may have their sales being boosted up during summer. Some companies' products may sell more during winter. So during these peak periods, there is revenue. But during the lean period, to boost sales, companies give discount. So companies also give discount during festival season to compete with others. So there are various reasons. Company has studied its history, and accordingly, they do have discount schemes also embedded into the budget. The other important part of budget is, now we have the sales budget. We have the quantity and the value by region, and therefore the all India quantity. Quantity is very important, as I said, because we CMAs can convert that quantity into value, but that quantity into sales value is different, and that quantity into cost of goods sold is different. Therefore, quantity is important. We are not doing financial accounting where only value matters. So when we look at quantity, we also have the history of the current year. Usually budgets are made somewhere around November, December, January for the next year. So we have already come along during the current year. We know our inventory levels. It can happen that in some region the inventory is high and we want to target inventory to be at a certain level. So the high inventory has to be brought down. If some levels, which rarely happens in some branches, if the inventory is very low, we will have to plan how to build inventory there. Keep sufficient inventory that customers are not lost. So inventory management by region and for the company as a whole is a very important part of the budget. What does inventory management or the inventory target process impact? What does it impact? You have sales, and then we are saying that we rework on the inventory. So what are we planning in the bargain? Anybody? We have sales quantities. We have opening inventory. We have already discussed and targeted where we want the closing inventory to go. If it is high, we want to reduce it. So in that arithmetic, what are we generating? Folks, we are CMAs. Please answer. You have sales.
What
Yes?
should be the total production figure?
Perfect. Correct. So in the bargain, we are actually budgeting the production figure. Right? If my sales is say 1000 units, for example, my inventory is 100 units, but my norm is that it should be only 50. So obviously the 1000 units that I want to sell, my additional inventory of 50 should come from inventory, and the remaining 950 will come from production. This is understood by everyone? Right?
Yes, ma'am.
Yeah.
Then where do we want to sell more? Where should the warehouses be? Sometimes this also works from your market point of view. Supposing I have a warehouse, you will see all the warehouses are outside Mumbai. Why? So that they can cater across Mumbai at a relatively lower cost. Mumbai is the market, but to have a warehouse inside Mumbai is very expensive. So you will find all warehouses are on the outskirts of Mumbai. Why? Rent is low, labor is reasonably available, and it is very easy to freight the goods to Mumbai within 24 hours. So that type of rationalization, understanding is also done during budget meetings. So if my market is in South, where exactly, which city is it today? And is that city the correct one? Is also what needs to be discussed during the budgets. Not every year, but sometimes when you want to move to a new market, or when your customer base shifts even within the state, then you will have to rethink. So these are things. What is the operating cost? Is my warehouse managed? Sometimes we give warehouses to manage to CNFAs. So is the cost okay? Is it reasonable? Or is it too expensive? Do we need to look at another CNFA? All these things matter. And what matters most is the obsolete inventory. If there is obsolete inventory that cannot be sold, then the budget should recognize this, should recognize it, and either make a budget to write it off if it is really obsolete, or to be able to sell it at a discount. These are some of the decisions that are taken in the budget room. Many of you may be used to doing inventory check, inventory valuation. And you may have heard, okay, this inventory is not moving for n days, n number of days. So in the budget, we look at how we can move this inventory or sell it as is basis at a much discounted rate. Then comes logistics, because that is the biggest cost after COGS. Once the product is out, shipping it to the right location and to the right customer is important. And during budget meetings, usually ways and means of controlling freight cost, which is always increasing. Always our diesel petrol costs will go up. Labor will always go up the next year. You may not be able to increase prices, and therefore how we can save costs becomes a very big topic of discussion when we set budgets. Freight being one of them, because freight cost is really high. You may have your plant in 1 or 2 states, but you may have your customers all over India. You want to reach them, so you need to stock your material at various godowns. There is godown cost, there is freight cost. Primary freight cost and secondary freight cost. So what are the means of freighting? How can they improve? Which is the best route? Should we move the warehouse to X area so that freight can be managed better? From which area will we get ample trucks whenever we want? Again, this may not be discussed every year, but yes, at least every alternate year, every warehouse needs to be reviewed, because in today's day, nothing remains constant. Absolutely nothing is constant. So far, okay. Then we move to the most important part of budgeting, that is production planning. And here is our 100% rule. According to me, our role is there for the whole budget. And actually, once you start doing budgets, you will enjoy doing it. But here we contribute the most. Production planning. Production planning means, what do I need to produce based on the sales budget? When do I need to produce? Do I have enough machine capabilities to capacity to meet those targeted numbers? Do I have the labor to support that budget? From where will my raw material come? How can I optimize the cost of raw material? So all this is part of our production plan. So when we said in the first slide that sales should be by product, a good CMA will always insist on sales quantity by product or group of products. Why? Because he or she can build the cost only if there is clarity on the product. People may say, and in many companies I have seen, they say that, okay, our COGS is say 55% of our sales value. Our COGS is 60% of our sales value. That is called a thumb rule. Thumb rules are okay for estimates, not for budgets. If we seriously want to make a budget, we have to make it complete, because within that budget, many smaller budgets get covered. So to start with, from the sales budget, we have the products or product groups. And therefore, we need what is the material that will be required to produce those products. What is the labor cost that may be required? What is the electricity that may be required? And what are the general overheads that will be there irrespective of production? So to start with, production planning freezes the quantity required. Simple. As I told you in my example, I will need 950 units because I have opening stock, I have closing stock. Closing stock is less by 50 units. So out of my sales, I will reduce those 50 units and 950 units will be my production plan. Very simply said. But we do all products based on this to get a feel not only of what is the quantity of units that we want to sell, but also what is my material required, labor required, expenses required to produce that. And therefore, how do I manage these resources? Budgeting is all about managing our resources to bring the best profitability to the company or get the best out of those resources. We do not want to waste resources, nor do we want to stretch so that we may not be able to meet our goals. So we plan the budgets by first making the BOM or the bill of material of each of the product. We also list out the routings. Routings is nothing but the processing time. Labor for each item, how much will I require? Machine time, how much will I require? That helps to calculate whether we have the capacity or we have that kind of labor. The next step actually is to multiply the production quantity arrived at into the labor hours that may be required per unit and check whether we have that much labor. Do we need to get temporary labor or give the current labor some overtime? In which months will we have this overrun where we will need additional? And therefore, it makes things very simple to understand where we need to plan for more. And remember, good planning means good probability of meeting our goals. While we do this, also, we do not have capacity. We may plan that no, so and so process is easy. It does not require too much of technical know-how. We can outsource this and save our labor to handle the more technical part of the production. So we can do job work, as we call, and outsource some processing to meet capacity requirements, or we can add capex if we think, and that's also part of the budget. If always any company is in a growth mode, no company will budget for losing sales. They're always in a growth mode. So to meet that growth, to meet the targets, do we need additional capex? We may say, no, we don't want to do job work. He may not do it correctly. We want to protect our quality, and therefore we may decide that we want to buy more capacity, add some capex. So that is also a decision which is taken when we do production planning. Along with production planning, here we saw we have a BOM. We have a BOM. BOM, I hope we all understand BOM, bill of material for producing that product. So it also throws up what is the quantity of material that is required. Whether it is raw material, whether it is packing material, what is the quantity. And therefore, purchase plays a very vital role of establishing the budgeted rate. Mind you, I have not used estimate. We plan the budgeted rate. That is also important. So purchase department will analyze the trend of price increase of that particular raw material. Different industries will require different kind of raw materials. With that trend, they may also negotiate with vendors and come up with a fixed rate for the next year, or some terms and conditions which sort of insulate the company from fluctuations in rate, if that is one of the challenges. So it is the role of procurement to actually approach, look at trade trends, approach vendors, seek, talk to them, negotiate with them, and come up with budgeted rates. Budgeted rates for the next year. And these rates can vary month to month also. Usually when we calculate COGS, we usually take an average of these rates and apply it, weighted average, so that we are able to derive the cost. Every month's fluctuating rate may not give us the correct cost. May not. Because there is always inventory. You do not know exactly how much you will consume. You do not know, the sales may vary from month to month. So normally for budgets, even if we have input rates by month, the prudent way to handle it is take each rate and the quantity for those months production planning and make a weighted average, so that you have control over the cost. If you put too many parameters in the budget, you will not be able to manage the variances well. Always remember, budget, setting up budget is one part, but tomorrow we should be able to analyze, if at all we are not going as per the budget, what is going wrong. So that is very important. Therefore, we should keep our budget calculations simple. Correct, accurate, but simple. So far, okay?
Okay, ma'am.
Right. Now comes to planning the human resources. Now we made a production budget. Simultaneously, every function will also make a budget of their staff numbers. Production budget helps us to capture wages. Wages, whether some temporary people would be required in the season or no. Would we be giving overtime to our existing employees or no? So the whole wage basket comes from the production budget. But there is also a cross check. Usually those who are working in industry will realize you cannot ask the labor to go if you feel that in the budget your output is less and your labor on hand is more. Only you can manage plus or minus in the temporary labor hired for a very short period, 3 months, 4 months, whatever. But the permanent employees are always there. So this arithmetic of what is my equivalent of output in labor hours and what is my labor hours available, and optimizing labor available to make the best of the production is also an art. And again, as I told you, we are trained to be analytical. Never forget that. Don't let somebody else tell you that this is not your job, it is my job. It is our job because we have the brains to be analytical. Unless somebody else also learns to be analytical like us, then yes, they can do it. Okay. Salaries, as I said, there are different functions. So there is a finance function, there's a sales and distribution function. So when the budget is happening, if we decide, okay, we will set up, we will go to new territories, whether within India or outside India, sales team will be required. So some more people may be budgeted in sales. If we increase our warehouses to reach further to the customers, we may require some more distribution staff or some CNFA, outside agent. All this goes into the HR budget. HR puts a value to these numbers. So and so people in so and so grade for next year, this is the average CTC. It is never specific. It does not say A's salary is going to be like this, B's salary is going to be like this. No. When we do budgets, we do not discuss individual salaries. We discuss the CTC of those those grades. So and so grade, so many people, this is the average CTC. Somebody who's in that grade for 4, 5, 6 years may have slightly more salary than somebody who is in that grade, who's just joined in that grade. But so be it. We do not go, nothing is done in a personal manner. It is always the average cost of people in a particular grade, rank, band, whatever you may call it. When we talk about HR budget, we do not only talk about what salaries we will pay. We also talk about all the facilities that people will get. Company to company, it may change. There may be a policy of training people, minimum so many people to be trained. Actually, a good HR team will go down to the functions and identify your people for next year's training. And they will actually put a number and a cost to the training budget. So there's a training budget. They know how many people they have to recruit new. They have a rough and ready idea about usually how much turnover is there and therefore how many vacant positions may have to be filled. According to that and the rates they have negotiated with their recruitment partners, they also give a recruitment budget. But when we say they give, again, I would say HR needs support. HR needs support to work out all this, to put it by month, to actually analyze what will be the cost if we do all this. And we should be able to help them and to support them. As I was saying, the more you get involved, the more people will want you to be involved. Then there is every function that gets covered. And usually, how do we do this? Supposing we are doing the budget, say we've started in the month of November, and we want to complete the budget by January end. Usually, after everything is done, the approval of the budget and the iteration that is required. Okay, in this branch, this is less. Okay, in this function, this is more. How do we do it? That iteration takes a long time. So usually we do the basic budget fast and then engage in discussion to come to what we really want to do. So usually what we do, if we are starting it in November, we take out the cost for 6 months from April to September by cost center. And if anybody has not understood the concept of cost center, please mark it and we will discuss once I have finished my slides. Because that is the most important part of capturing costs. I have seen in some companies, costs are captured from the general ledger or the trial balance. No, folks. Again, we are CMAs. We are not financial accountants. We have to know how to deep dive. And therefore, the concept of cost centers is very, very important. And again, we are not going to look at who's asking what questions. It is more important that collectively we understand. So in case cost center is not clear to anyone, you can please mark it and we will discuss it. But please understand it is very important to understand what is cost center. So various functions which we call cost centers capture their own cost. So usually we take down the costs of the previous year. So if I'm in, say, November 25, the budget is being done for 26-27, April 26 to March 27. I have 6 months data of the current financial year, that is 25-26, but I have the full year's data of 24-25. So usually to make it easier for the users, because they are not accountants, for them, sometimes we don't even share with them their own costs. It is important to share with the head of each of these departments, what have they spent and how does it impact. So we give them this data, last year's full year data, current year's 6 months data. Ask them to how much they will spend current year, next 6 months, and what do they think is their estimate for the next year. They give, we analyze. Always. It is not that somebody gives and we take. We should never forget our role. I'm again and again saying, the more stronger you stick to your role, the more visibility you will get, the more respect you will get. So we analyze this data and ask questions. Why this cost you will increase? This cost last year was more because of a one-time cost of so and so. Current year we are not incurring it. So why do we want to budget it for the next year? These questions are important. They are important because that will shape the profit of the company. And we are working on an annual plan or an operational plan to improve our profitability. Always remember, a business works for profit. No business works for anything else. In the bargain, we have good relation, HR, all this is fine. But when people invest money in a business, what they are looking for is return. And all the activities that we do is to ensure that the investor gets his return. The expenses that I have put here are normal. There is nothing much to really discuss. But if I would say electricity would be more related to production. If you look at electricity cost across the company, there will be some electricity cost in the branches, which will be very small. 95% of the electricity cost in any company will be in production. So it is production centric. Fuel, in case you have boilers or something like that, which need fuel. Again, production centric. Usually professional fees are admin and finance centric, marketing also. So you have auditors, you have surveyors, you have designers. So professional fees will run across various cost centers outside production. Very rarely you will find professional fees in production. Very rarely. Maybe if For a short period, somebody was invited for some technical improvement. Yes, professional fees. Otherwise, in the production, even when we say key testing charges, QA charges, it is QA charges, not professional fees. The difference being you are giving material for testing and they are giving you a testing report. And that is the normal part of your day-to-day business. Therefore, they are QA testing charges, even if they are to be done from outside. Professional services, on the other hand, do not run with the business. They may still be constant. Some professional services may be incurred even if you don't have business. And some may be for a certain period or a certain activity. So mostly professional services are outside production. They are indirect costs, not loaded to the product. Again, direct costs, indirect cost, what is loading to product? If again that concept is not clear, we discuss it after my presentation. Legal fees will be legal and admin related. Very rarely it will be manufacturing related. Even if it is manufacturing related, we don't load legal fees to products because they may be one time, they are not routine. Travel expenses across the company in all cost centers. Rent can be office rent, godown rent. If your factory is in a rented premise, factory rent, it can be anything. So rent again can be across functions, across cost centers. Then comes marketing. While the earlier costs are more of a standard nature, advertisement and marketing costs are actually promotional expenses. And they need to be budgeted very, very, very carefully because much of our sales budget may be dependent on marketing strategies. What do we need to do? Which states we need to advertise more? Usually, if you see FMCGs have these advertisements, sometimes during special periods, as I said, it is two ways. During special period to push more sales, there may be advertisement. During lean period to push sales, also there may be advertisement or there may be discount schemes. And all these are considered marketing schemes. The difference between cost and discount is usually reduced from revenue. All other marketing schemes are an expense. So there will be trade offers. All these have to be included in the budget. Okay, this is what I will do to reach this target. And actually, as controllers, as reviewers, or as owners of budgetary control, if a particular activity or an expense was not budgeted, it becomes our duty to challenge it. And then you may get a reply, no, sales karna hai to ye karna padega. So then the question is, what else in the budget will you forego? Because again, budgeted expenses are sacrosanct. You can't afford to just let go because then you will never meet the profit. And therefore, I say that is the strongest role. And if we have the opportunity, we should never give up that opportunity. So these are various expenses. As I said, some are production centric, some are marketing centric, and some run across all functions. Then comes IT. And many of us miss IT when we do our budgets. Simply miss them. Because we think IT is a support function. What's their role in the budget? But we have a sales budget. We have decided that we want to enter 2 new regions. People will be there. They will need some IT equipment, some IT hardware that needs to be budgeted. Then equipments, right? Now, without laptops, without desktops, nobody can work. We have reached that stage. So, obsolescence is there. Usually, companies have a policy of life of hardware. And not every time at the end of the life, the hardware really becomes redundant. So, life of the hardware is for financial accounting. Expectation of life is for budgeting. So we may say that a laptop has a life of 5 years, that's 3 years. So therefore, I will calculate depreciation for across 3 years. Fine. And that's an accepted now. But we have observed that in the condition in which we use laptops, the condition of our offices, the dust-free condition of our workplaces have allowed laptops to run for 5 years, usually. I'm just giving an example. Then I may budget for replacement of laptops or desktops which are going to complete 5 years in the budget year. If my experience is that no, we have very dusty offices and usually the hardware gets spoiled in 3 years, then we will budget accordingly. But that budgeting is important. If we don't have the budget, from where will we buy the IT equipment when we need them? So this budget, very often forgotten while doing the budget exercise, is important because hardware is expensive and is required. You can't do without it. Similarly, software. As part of the budget, sometimes we also budget what we want to improve. And presently, we are in an era where we are moving from manual processes to digitalized, automated processes as much as possible, as much as our pocket can afford. So usually every year, there are some things that we may want to take up. Some things we will say these are must, like security. Security, no compromise. You must improve your security. If your IT security is low, we need to improve it. It just gets into the budget. But there may be some good to haves. You want to improve, you want to move from your old ERP to new ERP. You may then think whether in this budget I can do it or I cannot do it. Right? So these questions, this discussion is also part of the budget process and impacts the budget. Then comes costing. Now I have written costing, and after that there is a tab where I'm saying budgeting. I'm not here saying costing means CMA. I'm just saying product costing. And to me, the whole budget is ours. So let us not differentiate saying that this is only my area in the budget, which very often we do. Very often, practically, when we come down to doing our costing, doing our budgets, we get involved only for the costing process. No. Our brains are trained to do the full budget. We are CMAs. Right? So costing is only one part of it. While I have tried to put the costing process in brief here, it is really very detailed. Really very detailed. And when we actually do budgets, we spend at least 60%, 70% of our time getting this right. So we discussed earlier, we have a BOM. We discussed earlier, purchase has given us rates. We have discussed earlier, we have our worker numbers. We have their annual CTC. So we have labor cost, we have input cost, we have labor cost. And then we have also talked about doing routings. Even if you don't have the system, and if you are doing a very simple business, routing is nothing but how many hours are required on the machine, as well as how many labor hands are required to do certain jobs. So if you take a batch of 1,000 units, if it required a whole shift to make 1,000 units, you will say my machine hours for 1,000 units was 7.5 hours. Therefore, what is the minutes required for 1 unit is what we will calculate. If for one shift to make those 1,000 units, we on the machine 3 labor were required. Then 3 labors, 3 into 7.5 hours into 60 minutes per hour divided by 1,000 is the labor time that you will require. And then we have already costed the labor cost. Total labor cost divided by total labor output. Remember, output, because you may have people slightly more than your actual requirement, because there are stoppages, there are holidays, there are times when material is not available. So all that is built into our labor numbers. And therefore, labor cost numerator is always number into CTC, numerator. It is divided, denominator is the labor hours equivalent of the output. And therefore you get a labor rate. Similarly, overhead rates. Overhead rates is again, as I said, machine ran for one shift, 7.5 hours into 60 minutes divided by 1,000 units is the machine time. But what is the cost of 1 hour or 1 minute of the machine? So it has some direct costs and some indirect costs. So there is a way in which we recover direct costs and there is a way in which we recover indirect costs. Can any one of you help me with what would be the direct costs of the production of manufacturing shop? Direct costs. Can anybody help me? I hope I have not put you all to sleep.
I request all the members who are participating to please
Respond.
answer.
Please
Yeah,
respond.
because
It's a
power.
material
What
cost.
we are using
It's
that
a material
power, it is a variable.
Overheads.
What is direct overheads? Yes, what is variable?
Yeah.
I got
Variable
that
overhead.
answer. What examples? I'm asking for examples.
So in the productions, the variable overheads will be consumables and all, okay, which varies, okay, with the production cost. That is every unit which increase, okay, the cost which goes up. That's the variable cost.
Correct. Example.
Example.
Madam, oil, madam. Oil.
Sorry?
Lubricants.
Oil, madam. Example, per liter, this much consumption means that will be fixed overhead.
No, we are right now. I'm talking about variable.
Variable is, madam. In factories, grease will be used, madam.
Okay.
Whenever required, grease will be used, not daily. That is variable.
So, ma'am, direct cost means
no. Somebody answered very correctly. What we need to produce. So if we want to continue our production, what is directly related or what varies with production is variable cost. So variable cost, first of all, is electricity. Would everyone agree? More production, more electricity. Yes, no? Agree or disagree? No problem. But speak.
Agree.
Yes, ma'am.
Agree.
Right.
Agreed, ma'am.
So first and foremost,
So
electricity.
basically,
It is
basically,
semi-variable.
ma'am, there are basically direct labor which is linked to the line. So those will be the part of direct cost. Then electricity cost which we use to run that line, which is directly related to that line. Then
Very good.
consumable, so whatever the
Perfect.
consumable we use to run that line.
Perfect.
And then there's some other variable cost which is directly linked to that production line.
Perfect.
So those are the
Perfect.
kind of the direct cost.
Perfect. So those costs that are linked directly to production. So every additional unit you produce, you will need additional cost, is variable cost. While Yogesh, you mentioned direct labor, and you are right. Direct labor is variable. If we have to do 1 unit, you need X labor. We just now discussed, right? The labor time varies with production. So for considering in cost, we took actually labor cost divided by machine time, and we will apply it to the product. But in real fact, very often, labor is not variable. This is just a practical, there is theory and
Yeah,
there is
you are
practical.
right, ma'am. Means yeah, you are right. Means whatever the permanent labor which we have on roll, those are kind of fixed cost for us. But while doing the budgeting cycle, we consider those as a variable. But ideally, those are the cost of fixed cost for the organization and not a variable.
Yes. And therefore, when we do analysis, we always keep labor separate from overheads. Labor cost, overhead cost. Also, labor cost rate depends on how much labor you require. If you have very, very sophisticated machines, your machine time will be more, labor time will be less, and vice versa. However, in today's world, we cannot reduce permanent labor. Very often, even temporary labor is very difficult to reduce. But what we can do is we take additional hands during peak season so that we manage the labor. So we do not take that additional labor, even if it is temporary, throughout the year, so that we do not take them as good as permanent. If you take a temporary person every day, it will be very difficult for you to tell him not to come. So therefore, these temporaries are only when additional work needs to be done. And very often we also try to meet that requirement by doing job work, while getting it processed from outside. But that was correct. Usually electricity, consumables like your grease or oil. If oil is required in many manufacturing, engineering, tool manufacturing companies, oil is required. Without that, it is not possible to produce the tools. So it is consumables. Anything that gets
Fuel also we
consumed.
are using, ma'am. That diesel for that boilers we are using that LDO diesel. That is also we consider as a variable, ma'am.
Correct. If boiler is necessary for the operation inside out, sometimes we use boilers for specific purpose and it may not be required regularly. But your manufacturing process requires heat from boilers to be available regularly, then yes, fuel of boiler is variable. Fuel of a generator may not be variable. Do we agree? Fuel of a boiler is variable because it is part of the manufacturing process. Fuel of a backup generator for power is not variable. And therefore, it is important that when we analyze cost, we analyze them by cost center and not by expense code head. Keep this in mind. Because an expense account is not the full truth. Right?
Yeah.
I'm sorry.
But when we are calculating that power cost, we
Yes.
have to include that power as well as that genset cost also we are considered. Then it is
Correct.
coming into the
Correct.
variable.
Perfect. So that cost gets included in electricity cost.
Yes, ma'am. That's a
Right.
variable.
And therefore it will become variable like boiler.
Yes.
Right. But not always that generator may be used for factory. If it is a generator that is used for other purposes, it may not be variable. It may be fixed. Even electricity, somebody said, is semi-variable. Because electricity, even if we are using electricity, the electricity head, the head account electricity may collect electricity cost for plants, for your corporate office, for your branches, everything. And therefore, again, it is not the expense head. It is the cost center that we have to look at. And the electricity cost of the plant is 99% only for production. Very little will be for street lighting or something like that, but it is also for the plant. So usually plant electricity is considered as variable. The other electricity is considered as overheads, not even related to production. So we were here, right? All this we actually discussed and spoke. Material is always variable. Labor theoretically variable, practically may not be variable. Direct overheads like electricity, fuel, consumables, variable. Now, when we talk about fixed and understand this concept also, if we have seen a factory, then we know that in the factory, we have various functions. Some departments are actual production departments. They work on the product. They either may turn raw material to SFG or SFG into finished, or they may be continuous process which starts with the input of raw material and ends up with finished goods. These are called production departments or production cost centers. However, in the factory, there are various other departments or cost centers that support production but do not produce. Anybody can mention which? Which are the departments?
Like finance, supply chain, HR, maintenance, project team.
Canteen service department.
Yes, canteen.
Procurement department.
Sorry, procurement. Yes. So let us again understand. Sorry, I missed you.
Admin department.
Sorry.
Admin.
Okay. So again, we are here talking about cost of manufacture. And when we talk about cost of manufacture, in your factory premises, you usually have security, maintenance, HR, not really. It is called time office because they are actually monitoring the attendance and the overtime of workers. HR department may be in the corporate office. Then there is procurement department. There is stores, material receiving department. And all these departments collectively support production. If it is a very huge factory, we may have a factory accounts department also. But now in today's world, with better ERPs available, factory accounting has shrunk. It has become small. But so be it. If there is an accounts department in the factory which looks after the factory operations only, then that is also an indirect overhead for that product. The corporate office for finance, sales and marketing, HR at corporate level, marketing at corporate level, and the finished goods warehouse in the factory are not indirect overheads for the product. They do not help in producing the product. They are indirect overheads, but they are separate functions. When we are calculating cost of goods manufactured, these costs do not come in. Even when we calculate our cost for cost audit, these are non-allocable because they do not directly increase or decrease the cost. Even if production becomes half, these costs will remain the same. Do we agree?
Yes, ma'am.
Right.
Correct. So when we are taking the cost of goods manufactured, we do not take these costs. We take the costs that are incurred at the factory. At the factory for the production. And if we have multiple factories, then at each of those factories, your cost of production of the same product will be different in different factories. Nowadays, the factories in Mumbai have almost disappeared. But if we have a factory in Mumbai, we have a factory in Thane, we have a factory in Nasik, and we have a factory in Aurangabad, the cost of production of all four will be different. Mainly because the labor cost will be different, electricity cost will be different, indirect labor will be different. So it is important to understand the cost of production, and in that fixed variables are fixed variables of the production department as well as the allocated overheads of support departments like QA, purchase, time office, security, and inward go down. So we add all these costs indirect. The production department has its own indirect costs because it will have supervisory staff. It will have supervisory staff, which is not direct, which is not variable. They will remain the same, irrespective of the output. So they are fixed or indirect. So each production department will have its own indirect costs. And to that, we will add the allocated costs of service departments within that factory, because those have to be absorbed by the product. Also, one very important fixed cost is depreciation. And in costing, we do not miss depreciation. We include depreciation. Unlike financial accounting, where we pull out depreciation and keep it separately. No. Depreciation of manufacturing machines is loaded onto the product cost as cost of manufacture fixed. And therefore, these fixed costs are added up by production cost center and divided by the output equivalent of machine time. And based on that output equivalent of machine time, so in 1 month, my machine is budgeted to run for so many hours to produce the budgeted sales output, budgeted production output, beg your pardon. So it is divided to come to a fixed overhead rate. And these rates then go in to bring in the product cost. So therefore, product cost usually is broken up into material, which is variable, labor, which mostly we treat as fixed because there is a labor budget, so it doesn't matter. Variable overheads and fixed overheads. Why do we need this analysis? Because afterwards, down the line, we need to use them for our other techniques of costing. We want to find the marginal cost. We want to find our break-even point. We want to see how we can enter an export market. We want to see how do we want to introduce a new product in the market. For that, understanding this breakup and being flexible on the fixed cost is important. Again, it will go into a different tangent if I discuss that right now, but we will stick to this understanding. Then comes the CapEx budget. It is important for us to. Is there any query?
Yes, ma'am. Actually, I want to ask about the PPC department in manufacturing companies.
PPC is usually taken as the fixed cost. Sorry. In the last line, it is the fixed cost. It is like we discussed QA, PPC is also part of it. These are support departments, not directly producing. When we say direct production departments means it should have a machine and it should convert A into B. That is production department. All the others, even if they are 100% required to ensure production, they are always support departments. Just you should think it from this point of view. Does that activity add to the production process? No, it supports. It supports. It may make the design, it may schedule, it may ensure things are right. Okay. It doesn't produce. Okay.
Oh, okay.
Right. So again, CapEx budget, we spoke earlier that while we are doing the production budget, we are also budgeting for what CapEx we want to incur, what we want to spend. Same way in IT, there is CapEx. We could have CapEx in admin also. We could have CapEx in S&D also if we have decided to add a new location. So you will set up an office there. You will need some office furniture. Nowadays, we get ready offices, but many companies prefer to rent out a premise and set their own office. So there will be CapEx. CapEx budget is an exercise in itself. And it helps in two ways. One is it helps to determine what is the depreciation for the year. Second, it also helps to budget the cash flow because CapEx cash flow is substantial. And once we consider this cash flow, after considering that, if the annual cash flow is positive, then it is fine. So it is not just the operational cash flow that needs to be positive, the full cash flow needs to be positive. So having a proper capex budget ensures that we will sell as per plan, because that capex budget is related to our capacity, which is then related to our ability to provide correct quantities for sale. Capex is important so that we continue to have good hardware and software. So this capex budget actually is done in quite details as I explained the expense budget. You start with the assets on hand, maybe at 30th September. Add to it expected additions in the current year. You will come to budgeted capex at the end of the current financial year. To that, you will add additions. You will check for deletions. If something is expected to get obsolete within that year, you will show it as a reduction. And you will actually calculate the depreciation cost. Depreciation cost of assets which are currently in the ledger, what would be their depreciation cost, and what is the depreciation cost of the new products. And therefore, when we do, new capex. So when we do capex budget, we at least must do it by quarter, at least. Most good companies phase it out monthly. Again, it is a budget. You may buy slightly later or before, but it has to be close to the budgeted timing if we want to achieve the budgeted goals. So, but capex budget gives us one, the depreciation for the P&L. It also gives us the closing value of each of the asset type for the balance sheet. It also gives us how much funds will be required for the current year's cash flow and when. So this part actually needs to be done very well, needs to be done with the help of those departments that have asked for it. Usually in well-managed companies, the capex budget is separately approved by the board of directors.
Exactly, ma'am. That capex budget in most of that senior management groups see the payback years. It be less than 1 year immediately approved or 15 months. Yes, slightly getting more than 2 years. Very difficult to get the capex, ma'am.
No, you see, it is like this. It differs from company to company. And each company has its own policies. While listed companies are guided by the rules set in by MCA or SEBI, which requires capex to be approved by the board of directors. Private companies may be more flexible, but they all have their internal policies. Even if something is approved by the board of directors, that's only the budget that is approved. But when we are actually working, there is some practical challenges. So there is also an internal approval process. So it is internal to the organization. What is the policy that we set up beyond what is required by SEBI or by MC? Right? And therefore you may find it difficult. While some companies may have a flexible policy for approval, like most of the companies where I worked, if the budget is prima facie approved by the board, or it is sometimes there is a committee below the board, one step below the board, which analyzes your capex thoroughly. Why do you want this? What is the IRR? What is the challenges? What if we don't do? What would happen? So that full conversation we have with this committee. Then they understand it and they prima facie recommend it to the board for approval. In such detailed recommendations, usually a Approval by the internal management is then only to control the costs. Whether you may budget for something, say 2 crores, you may budget for a machine. Actually, when you buy the machine, you will look at all vendors. Not because 2 crores is sanctioned, you will not catch hold of the first vendor and approve and ask him to give a quotation of 2 crores. No, you will still go to 2, 3, 4 vendors, usually minimum 3. Check for their quotes, check for the technical specifications, and then somebody internally, maybe the CEO or the MD, may approve that particular capex in spite of the fact that it was already in principle approved by the board. Because capex is a big cost, it not only is a big cost, it is also a very important decision, as that will impact our ability to produce or ability to run the business, as the case may be. And therefore, we cannot afford to make mistakes in procurement. And that's why sometimes we may find that it becomes difficult for the internal management to approve. But usually, larger companies have a very defined process. Unless the position of the cash flow does not allow us to buy, the internal management will only look at the efficiency and the costs of that actual procurement and approve it. If there is no cash flow, then yes, internal management does hold it for some time till there is good cash flow. But very often, even that is budgeted that in this period, the cash flow will be low. However, we will still buy and we will do a temporary borrowing. Sometimes you may budget to buy a capex on term loan if that is so critical to you. Term loan interest may be 12, 13, 14, 15%, but you are sure you will make a margin of 30%. You may have a term loan. So it depends, and it depends on the risk taking of the company, its policies, and its process of approval. Okay, Chandrasekhar?
Yes, ma'am. Even though pollution control board, if they are putting any norms, we need some machines. At the time, we are not expecting any payback period. What you have said is correct. Based on the government norms, we need to implement it immediately.
Yes, that we implement because it has an adverse impact. You may be penalized. Correct? So you don't want to be penalized. Okay, so that on CapEx, human resource we discussed. So I'm not going through it once again. We discussed staff cost, recruitment, training, everything. And as somebody said, the canteen cost. Canteen cost is usually considered as employee welfare cost. And it is loaded along with the employee cost onto the product, whether direct or indirect. So canteen costs in a factory will be divided between direct workers and indirect staff. Sometimes workers are also indirect. Workers who are working in QA, workers who are working in incoming production department, incoming material department stores, incoming stores. Workers who are working in maintenance department, they will be indirect, even if they are workers. So all workers are not direct. But we discussed how we calculate this cost. So in the paucity of time, I will go to the next slide. So we were just now discussing various elements. And once we have these elements, what we set up doing is we try to get the costs down into a template so that we can use it. We summarize all the department-wise costs that we said. We summarize by cost center so that we can apply them correctly. And when we come to the P&L format, you will understand what I mean applied correctly. As we said, electricity cost for production of a production factory will always go to COGS. While electricity cost of the corporate office, if it is say in Mumbai, or a branch office in various parts of the country, will go to admin and S&D costs respectively. Try to understand, we are talking about cost centers and controlling costs. We are not talking about financial reporting. Okay. Then we can calculate revenue. Now we have the quantity, we have the rates, we have the discounts. So we can calculate revenue. With the same quantities, we calculate COGS. Few slides before, we have seen how we can calculate the cost of goods manufactured. So the cost of goods manufactured, if you remember the slide, it had material, labor, variable overhead, fixed overhead. Within these four components, we multiplied by the sale quantity to come to cost of goods sold. Understand this. To calculate the cost, we use the production quantity. To calculate the rates, we use the production quantity so that we arrived at the per unit cost of production. We will use this cost of production and multiply it by the sales quantity to arrive at the COGS. Why are we taking sales quantity here? Can anybody tell?
Probably the sales may go up or down in certain mix. So that's why cost should not be
We are matching with revenue.
Revenue. Yeah, revenue also same thing.
So therefore, we will take sales quantity. Otherwise, the more technically correct way is you put your cost of opening inventory, you add your manufacturing cost, you take the closing inventory at current budget year manufacturing cost and do the arithmetic. That is the more perfect way of doing it. But practically, sometimes it is not possible. So we take the cost of sales based on budget. And if we have decided to save inventory, then we adjust that also in the cost. Okay. So actually, when we are taking revenue, we have to match it with the cost. And therefore, in the budget, we take sales. But as I said, if we are very clear, we want to reduce the inventory, then to the extent of the inventory that you will reduce the sales quantity and you will add the cost of opening stock. But very rarely is it very different. So while calculating budgets, it is easier straight to take the sales quantity and multiply by the cost of the product. Discounts, as I said, discounts, you have to take them in those months in which they will get incurred. Why? Why not simply divide them by 12 and take them across the year? Because in those months, actually, you will have to give discounts. If you divide discounts by 12 and apportion them across all 12 months, you will go wrong in your control analysis, variance analysis. As I said, it is beyond the scope of this meeting. Maybe some other time we will do budgetary control, variance analysis. Today we are only talking about budget. And therefore discounts we should take only in the months in which we are actually budgeting to give discounts. And they may not be same across the year. If discounts are same across the year, we will add it's as good as giving a reduced sales price. Agreed? This statement everyone understands, right? If discounts are going to be same across the year, you might as well reduce the sales price. So discounts are rarely same across the year. They are targeted to induce consumption by encouraging the customer to buy, either in a festive season or in a lean season. In a lean season, to reduce our inventory holding cost, we give discounts so that those who have the capacity, the cash flow to hold our inventory, provided our inventory is not perishable, then they buy and keep, and they will sell in the peak season. So discounts are given for both, mind you. Okay. Then when we are making the budget, important is the balance sheet. As important as the P&L is the balance sheet. And not only in the budget, mind you folks, even in financial accounting, review, analysis, and reconciliation of balance sheet sometimes is more important, because a wrong balance sheet will give a wrong P&L. Here we can build the P&L, budgeted P&L on its own, but the cash flow will come from the balance sheet. And in any budget, the cash flow is as important as the P&L. So we actually budget the receivables, the payables, inventory. So receivables and inventory will hold cash, payables will release cash. If your payables are more, it is good for you, your cash flow is better. If your payables reduce and your receivables increase, you have a big problem with cash flow. So as I said, budgets happen in iteration. If the cash flow is not correct, you have to go and revisit your budget assumptions. You have to revisit how you can improve that budget to make the cash flow positive, and not just positive. You should have cash flow to be comfortable. If you don't have cash flow, you will incur interest cost, and unnecessarily the profit earned are then paid to the bank. So
It seems your voice is not clear.
Sorry, my voice is not clear. I am speaking with the same volume.
Voice is
Folks,
not
you can
audible.
hear me?
No, okay,
Yes, ma'am,
ma'am.
you are audible.
Okay, okay.
Yes, ma'am.
It may happen, some fluctuation in between. So first, it is important to build the balance sheet in the budget. Doing only a P&L is not budgeting. So actually, we need to analyze what is the receivable solution position. When we do budget meetings, we also look at those branches which are holding more than required receivable. What is the plan to reduce that receivable is also part of the budget and is also part of the KRA of the credit control team. So receivables, payables, how can we engage with customers to give us some credit period? Because any excess cash flow is good for us. It keeps us flexible and we are able to manage the business better. Then we use the inventory management, which we discussed earlier, to tighten our inventory so that if there is excess inventory somewhere, it gets liquidated. So as I was explaining for expenses, for balance sheet also we do the same. I'm in November, I want to do the budget. I have my closed September end balances. Sometimes it can be October end also. And to that, we will add what is it that we expect during the next 5 or 6 months to happen. And how will my receivables move? So I have target receivables for the year end from which I work out what will be my receivables at the end of the budget year, or at every month end, or at every quarter end, depending on the organization's capability and capacity to analyze. As I said, by month is the best norm. It's the best way to control. But if it is difficult, some organizations do it by quarter. If you ask me, it has to be done by month. It is a budget. And that budget has always to be compared with actuals. and that comparison with actuals have to happen at least at each month end to get proper control, because we are controllers, right? Then with the budgeted balance sheet and of course the P&L, we will build the cash flow, because cash is cash. Cash is the real reality of the business. आप जो भी कहो, if there is cash, the business is good to do. There is no point in making profit, but it is locked in receivables. Money is locked in receivables or money is locked in inventory. Someday they will hit you. Today you feel you have made a profit. Those receivables may go bad. Those inventory may get obsolete and they will impact your P&L at some other time. So therefore, cash flow, healthy cash flow is healthy business. Then once we do that, we prepare a P&L. And frankly, this P&L should be from control point of view and not from expense point of view. And we will come to that in a minute. I don't know if some of you who work in MNCs will realize that MNCs usually use the controlling P&L. Indian companies usually do everything by the SEBI format. SEBI format is good for financial accounting. For management accounting, you have to do the P&L from a controlling point of view. And that then brings us to the format of the P&L, where I will put the format for you to understand what I mean by the controlling P&L. Let me hope this works. The Excel sheet is visible to everyone? Is the
No,
Excel
ma'am.
sheet? Huh?
Not yet. Not yet.
Okay, okay. One second. Is it visible now?
Visible, ma'am.
Yeah.
Right.
Yeah.
Is it, should I make it big?
It's fine, ma'am.
No,
It's visible on yeah, it's visible.
So first let us see the columns up to E only. Right. So here, as I said, it should show our controlling points. Income from sale, other income, which is the same way as we do our financial accounting. From that, we subtract cost of goods sold. Cost of goods sold, as I said, includes labor cost, direct, indirect staff cost. It includes electricity, right? If we say labor is fixed, labor will come down and only electricity, consumables, other things that we spoke come here. I'm telling you, it is not always required that labor is fixed or labor is variable. It will depend company to company how flexible they are with their labor. Right? But normally labor is taken down as fixed because tomorrow when we take decisions, supposing we decide to half the production, labor may still remain the same. But technically labor is variable. If we decide to double the production, we will have to take in more labor. So that is a debatable element and you may use it as per your company's requirement or ability to play around with labor. So we have variable cost is reduced to come to contribution margin. This contribution margin helps us to arrive at our break-even point. But as I said, not in this session. Then we reduce the fixed manufacturing cost, cost of goods sold, and then come to a gross margin. This gross margin tells us what cost do our products incur. Everything beyond this is overheads. Manufacturing cost ends here. The other functions that we have are marketing, distribution, and in distribution there is variable cost, mind you. What is the variable cost in distribution? Anybody? What's the variable cost in distribution? Quick.
It's a salesman's commission or something like that. Cost related to sales, the
Could
logistics.
Could be, yes, freight cost. The freight cost is directly related to your volume. So freight cost is variable. If you have an agent to whom you have to give commission, or your dealers have to be given a commission, you're not selling to them, you're giving them a commission. Then that commission is variable. Salesman travel again is debatable whether it is variable or fixed, because he will still travel even if he could not make a sale. But normally, the more your sales target, the more he will need to travel. So again, depending on the policy of your company and how you expect the salesman to travel, it can be both fixed and variable. But normally, yes, travel cost will vary with sale. But mind you, if there is a lot of receivable pending, it will also vary with the collection. So again, as I said, we are CMAs. We have the analytical brain. So it is for us to think and analyze accordingly. The rest, finance cost, and you will realize, did I miss something? Finance cost is of course fixed. It has got nothing to do with the production units or sales units. It has to do with the cash flow, ability to collect. And it is not that the less you sell, the more good your cash flow will be. It is not like that at all. Those doing financial accounting, do you find that there is something missing? Do you find anything missing? You may find depreciation missing. But depreciation goes into functions. This is not financial accounting. This is management accounting. And therefore, depreciation incurred in production has already got loaded to the cost of goods sold. Depreciation in the branches for assets or laptops in the branches has gone into selling and distribution fixed. Cost of laptop software for finance has gone into admin costs. So we are looking at the controlling elements for overall costs, because those departments, those functions are responsible for their costs. Then we may say, but our financial accounting, should we do it differently? So that's why I put this table here. The same cost that we look at here. In financial accounting, we put sales, then we put material. Then after that, we put wages and salaries. So we will add this. We will add this. Next, we put all the expenses. So these expenses. And last, we put depreciation and interest cost. So the costs are the same. The way of looking at it is different. The way of controlling it is different. Because financial accounting happens after that period is closed. Manufacturing accounting or management accounting concentrates on improvement of profitability and control of expenses, and therefore has to be looked at by function. Is this understood?
Yes, ma'am.
Right. And those who actually work, our maximum work happens here. Maximum variance analysis of fixed and variable costs. Because the rest of this is pure costs. They do not differ in any way. When actuals happen, it is only cost of goods sold that has to be really compared with what has actually happened to understand the variances. Did we procure for a cost more than what we had budgeted? Is our recovery less and therefore the cost that has gone into cost of goods sold is more than what we had budgeted? What is the activity variance? What is the material usage variance? What is the price variance? My material price variance, material usage variance? What is my labor rate variance and labor quantity or labor hours variance? What is my variable overhead variance? What is my fixed overhead variance? My variable overhead variance will again break up into volume variance and my cost variance. I will start from sales variance actually. Sales variance will also be broken up into price variance, volume variance, and mix variance. So this whole contribution of our skills comes from sales to cost of goods sold, and almost the whole gross margin we analyze to understand what happened, what went wrong, what went right, how we should improve, how we should keep what is right well controlled. And below gross margin, what is there is only expense variance. To some extent, for the variable costs, you may say, okay, there is volume variance also. So if the sales has increased, we may have more cost. So if the sales is more than the budgeted sales, you expect this variable cost to go up? Yes. But the other things which are fixed S&D, cost of the branches, cost of running the corporate office, auditors' fees, professional services, all that is fixed, and therefore the variance, looking at the variance of these means comparing the actual versus budget is simple cost only. Why did we exceed? So all that is what we call budgetary control. Comparing each month's output or production or financial values with what we had budgeted. So from my side, this is all that I wanted to show you. So I am done with my presentation. In case you have any questions, would be happy to answer. So over to y'all. Again,
Thank you
if
so
you
much.
keep...
Yeah, thank you so much, ma'am, for such a clear and practical.
Yes, somebody
walk.
has put up his hand. Who's that?
Yeah, please. Yeah.
Hello, myself is VR Kedia from Bombay. I
Right.
got one I had shared my correspondence or talk with Sunetra with Ganesan earlier.
Yes, sir.
And
I remember.
I enjoyed your talk. It was quite informative, at least for the beginner to start the budget system, the organization and all that. I got only one point to add here that
Yes.
normally interest on working capital is considered as variable cost nowadays. It's not a fixed cost. Because more the volume, more the interest on working capital. So people have started changing their thinking in that. And we have done a lot of
Right, sir.
exercise on that. So
Right,
that's
sir.
only suggestion. In fact, I prepared one metrics on that, how that interest on working capital should be treated for different
Right.
product group and separately for export and domestic, which I will send you
Right.
separately.
Yes, that would be great, sir. That is a
Yeah.
different perspective. Yes. Thanks
Yeah.
for sharing that. Depending on the industry and how the working capital, because sometimes even if you want to control your working capital, the industry norms are such that you can't. And therefore, yes, more you sell, the more you will need to have interest cost. Perfect point, sir. Thank you for sharing it. Thank you so much. Thank you.
Okay, thank you, ma'am. It was a nice presentation, but can you share one financial model for the entire budget where all the interlinkings are there, like balance sheet, cash flow, income statement, all the budgets?
Yes, that is possible, but I mean, it's to be done in a progressive manner and then linked. So even if I do the formats, means if somebody is really interested, I can help that person with the formats, but it is to be done in that depth. Only then those formats will work, because most of this is not available. To have linked files, it is easier to have linked files from financial accounting, because you are downloading from the trial balance and you are using. Here you are creating the values. So those values, when they are collectively worked on and shared, it is your process of laying out the costs that will determine where they will go. But in case you have any budget worked at any level, you can reach out to me and I will definitely work on that and give you the connections of how we should have the balance sheet and cash flow, because most of us don't do that balance sheet and cash flow that regularly. We concentrate more on the P&L. But if you have an example, if you have done something halfway offline, do share it with me. And to everyone I'm saying, like I have been in this industry so long, I am here only to give what I have learned, frankly. So I'm ready to help anybody. Don't feel ki how can I go and ask for help. I do wish that we as a function, we as a stream of accountants flourish, we help each other to grow. And that is my lookout. I mean, the fact that I have come over here is only because I wanted to share this knowledge. Those who know me for some time will know that anywhere I am, I hold sessions like that, so that whatever I have learned over the years, I'm able to share with people. And my intention is only that you progress. The day you progress, you call me up from somewhere saying that I did my first budget very beautifully, that will give me the benefit, the happiness that nothing else will give. Money comes and goes. So feel free with me. Without any hesitation, you can share where you are stuck, and I can help you complete those formats. Concept wise, if you want any help, no problem. I can share my number also with you. Only one thing is, you need to put on WhatsApp a message that I'm so and so and I'm trying to reach you, and I will reach out to you. No problem at all. So you can either take my number from them, or I'll give you right away also. No issues.
Okay. Okay,
reach out as a function. We should be together. As a team, we should be together. We should help each other grow. Because when we help others, we grow. When we
Sure,
share knowledge, we grow. So do not hesitate. Right?
Can
I'm
I
there
have
on the
your number?
Nasik group. I'm there on the All India group also. So from there also you can take my number. I just put a message in the afternoon inviting all of you all. So my number is 96
96
19
9.
89
Pardon, 969.
9619
Okay, 9619. Yes.
89
Okay. 5, ma'am, you said 5. 9615
9619 89
89
4401.
440. Okay,
It is there on the group. If you see my message, if you open it, you will get the number.
okay, ma'am.
Right. So feel free and increase your professional scope. That's all. All the best. Can we close?
Thank you,
Dhananjay?
ma'am.
Thank
Thanks a
you.
lot for sharing your knowledge,
Yeah.
ma'am.
I
Thank
think
you.
Dhananjay would like to
Yeah.
close the meeting, right? So let us
Yeah,
not take away his.
yeah,
Yeah, over to
definitely.
you.
Yeah, thank you, ma'am. The session perfectly was demonstrated how budgeting is the foundation of strategic financial management, from the input cost estimation to P&L projection. Every part contributes to the decision making, cost control, and profitability improvement. So, on behalf of ICMI Nasik chapter, I express our sincere gratitude to CMA Sunetra Ganesan ma'am for sharing her deep insights and practical wisdom with all of us. So I also thank all the CMA members, professionals, and students also who have attended today's session, and their active participation always important
Perfect.
in this golden jubilee learning series. On my appreciation to chapter team and organizing the seamless program. So I thank you all for once again, and have a wonderful evening ahead.
My
Yeah,
thanks also to all of you all who joined. All the best to you.
definitely. Thank you, ma'am.
Thank you.
Yeah. And we have recorded the session, so you will see the recorded videos very soon. Yeah. Thank you.
Thank you, Dhananjay.
Thank you, ma'am.